Hey everybody, could you please confirm that you hear me now? I believe now we should be okay with sound. I was having a problem on my end, but I believe that it should be fine now. Can I have a quick confirmation on the chat box that you guys hear me? Very good. It's perfect now. Thank you so much. Again, I'm not using my usual microphone. I'm not sure what just happened where my microphone didn't launch correctly, and therefore the quality of the sound may not be as good as always. So I apologize for that, but I guess that it's better that we just get started instead of having to reset all of my equipment to see what was the problem with the microphone. Hopefully this is good enough. Let me know, guys, on the chat box if it's good enough or not, because obviously as you can see, I'm using just a headset because I was not planning this problem to happen since I got like a proper microphone that works well all the time. Not today. Anyway, talking about today is February 25, 2021. Welcome to the session, Options with Options. As always, the beauty of options is that we can really run all different types of strategies to be directional, non-directional, to take advantage of inflated or overpriced options or the opposite, underpriced options and so on. And therefore, the beauty of options, give you options, means that we can always adapt to market conditions and be positioned in a way where probabilities are on our side, which obviously is one of the key pillars of trading: probability, risk management, trading psychology. Those are the very key pillars, isn't it? And therefore we love options for that reason. Before we start, disclaimer. So I'll just play it for you guys. Please make sure you read it carefully. It's on the upper left. It's being highlighted as we speak, so please don't rush it. Read it all. Make sure you are well aware of the risks of being trading in the financial markets. Of course, there is money involved, and therefore there is risk, and it's real risk. Okay, so we need to be well prepared to mitigate, manage the risk, and trade as smart as possible, with everyone unique personality, way to approach trading, different amount of capital in the accounts, etc., etc. Okay, but again, important for you to know. Agenda for today. We're gonna follow the same process that we started last week, to be precise. So first we'll start with a hello everyone, which I believe I did accomplish that goal already, and from there we're gonna start simulcasting. So as we speak, we are streaming on YouTube, on Facebook. We are also streaming on our private room that you could locate in our website itself, tradewithufos.com/live, and all those streams are running in parallel. Which first comment, it may lead sometimes to a little bit of delay. Could be 5 seconds, could be 20 seconds, depending on where you are in the world. So sometimes, I may have a question for you, and when you type on the chat box, it's coming a bit with delay for me, or vice versa. You may have a question for me, and when I get to read it, there is a little bit of a delay. So in that sense, I would like to ask everyone to be on top of your keyboard, ready to type, ready to be engaged and communicate, because the sooner we kind of communicate with each other with typing on the chat box and so on, the more efficient we will be, and we will kind of mitigate the effects of streaming worldwide, in that multicast environment. The other thing as well is, as you can see, so we are, and maybe one better way to do that is to bring our website actually. So let me do that on a different browser window, and I will bring it to you. We are, what I was going to say is that we are really pushing to the next level the coaching, the courses that we provide, everything. Okay, wait a minute. I'm going to have to mute actually. So let me do that on a different browser window, and because we're gonna have, now you hear me twice, isn't it? We are. What so I was going to say let me go ahead and click really on coaching instead. Pushing to the next level the coaching, the courses that we provide. Very nice to see you, Mark, by the way. So why am I pointing at this? Well, because if I scroll down the bottom part of the page here, we should have a calendar of sessions, okay? And I want to point at the sessions. We are about almost done with February, so I want to point at the sessions that we have in March, and you will see that there is a greater quantity of sessions. So what we have done when it comes to our model on how we coach you guys is that basically for the ones of you that look at trading as a, let's call it a part-time thing, and while you're serious about it, you take it easy. So probably everything we do in the public channels such as YouTube, Facebook, and so on, probably there's going to be enough material for you to get going and so on. But also within the community, we also have many of you that are looking at trading like, it's your passion, you're super serious about it, and you always want more and more. And in this sense, we are definitely putting more resources in place, as you can see on this calendar for March. But we will conduct that extra training in the private room. Okay, so to have access to the private room, you need to pick one of the memberships available here, which could be monthly, yearly, or all-inclusive. And notice that the yearly membership gives you access to one course for free, and also one-on-one coaching once a year. And the all-inclusive gives you access to everything, all the apps, all the courses, all the coaching, everything. So just to simplify the model, guys, hopefully this makes sense to you. And again, when we are running those sessions, okay, so what will happen is that we will be basically conducting the same content in the public environment versus the private environment, because there is no secret sauce in trading. Okay, there is proper knowledge, proper skill, proper discipline, proper approaching it as a business, proper many things, but trading is trading. So what we're doing is that if you think about the process, we normally look at the market first, then we review trades that we may have, then we manage trades if they are open, and then we look for new opportunities. So what we'll do is that we'll do one full cycle of this in all channels, and once we are done with the full cycle, then the public streams will stop and everything will continue in the private room. Okay, so I think I'm not sure if you guys got to have a black screen for a second, but I believe that now I know what's the origin of the problem with my other microphone. I think I got one cable there that is not in the right position. Anyway, so hopefully all of this is well understood, and therefore let's begin with the session today. We'll jump in the markets. Let me bring TradeStation. Here we go. We'll jump in the market. This is the S&P. Let's get to understand what's going on first. From there, we'll review the trades that we have, and then we'll look for trading opportunities. And once we find the first one and we plan it and everything else, then we will continue the training in the private room. So SPY, this is our ETF that tracks the S&P 500. So somehow not a very big surprise that when it hit the red UFO, then it started falling until it hit the green UFO. So all of this is not a very big surprise. When looking at implied volatility, we're looking at the VIX, so we can see how implied volatility is up by 6.84% today. So we are talking about 22.8% volatility. So it's a bit spicier than in the prior days, as the market was pushing pretty strong to the upside the day before yesterday, actually, and that's what we had. And actually, notice that from a climate point of view, okay, and this is something to be careful because many people may be kind of jumping on the moves just a bit too soon. So notice how we had a down climate for 2 days. Okay, statistics suggest that 3 days is a normal thing. Okay, 2 to 3 days. So the down climate was 2 days, and then now we change to what resembles an up climate. And the reason why I said resembles is because the dot is thin instead of thick, like we had here, meaning that the climate is unconfirmed, and because it's not confirmed, that means that probability is less on our side. So there is a little bit of indecision right now, and as the day ends, we may get another red dot into tomorrow's trading, or we may get back to a full thick blue dot, and then we know we are in a confirmed climate to the upside. Again, with 2 green UFOs below price, I would say that it is more likely for this climate to confirm and continue higher than continue lower. But again, there are many reasons why the markets move up and down, and if some of the reasons implied those on-field orders to be cancelled, so next thing you know, we may fall all the way to 373, which is where the next on-field orders are. So really not the best time to be very aggressive on betting on a direction with an unconfirmed climate. So again, certainly options give you options, so we can certainly put option strategies. It could be non-directional, it could be directional, it could be credit spreads where you have a buffer that allows you to be wrong. So we could certainly approach this in different ways, and we will be looking at those opportunities. But for the ones of you looking to get into trade opportunities aggressively directional, be careful because it may not be the day to do so. Okay, so careful with that. Anyway, so let's review the trades that we have in. We have two trades, Facebook and Nvidia. So when it comes to Facebook, okay, let me shrink it just a bit more. So we did this trade on Facebook. That was on the 4th of February, expecting Facebook to remain inside the purple range until the 19th of March. Okay, so far everything is working according to plan. As you can see, the price of Facebook is somewhere in the middle. We got UFOs above, we got UFOs below. So really there is not much to be concerned about. In any case, I would like to bring OptionStation Pro to reassess what the probabilities suggest, to see if there is any concern or something. Okay, so let's take a look. So OptionStation Pro. Good to see you, Christian. By the way, I didn't say hi to you. So let's start with FB for Facebook. Also, I'm gonna click on the Manage tab because I remember I have this trade on. Notice that it's showing positive P&L greater than last week. Okay, why is it that the P&L is greater than the last week? Well, the P&L is greater than the last week because we have accumulated more time decay, and as time passes and we approach expiration date, the rate of time decay, known as theta, accelerates. Okay, and therefore the theta values are greater, so we start making money faster on time passing. Of course, if Facebook was to either rally up or crash down very aggressively, then it would be a problem, no matter the fact that we've been in this trade for what is it now, like 3 weeks more or less, right? Yeah, about 3 weeks. It doesn't matter that this is the case. We would still, get in trouble if we were to go outside the purple area. Okay, so we still have risk. The trade is not over, even though I would understand, and Mark is with us in the room, and based on prior trades, I would guess that, Mark, you have a rule where when you get to half of the credit, you close the trade. So I would say that probably you are out of this trade if you took it. And if you didn't, it's absolutely okay. But again, since you are with us, and I kind of know your style based on other comments that you made before, so I'm just putting it out there so newer traders understand that one option is to go ahead and close the trade before reaching March 19. Okay, so the way, how are you, Ahmed? It's very nice to see you. So the plan for this trade is to the way we plan it is to hold it all the way to March 19, and it's absolutely fine to do so. But again, and especially I'm very excited about March and beyond, because we're gonna have more sessions. It's gonna be double the amount of sessions that we do together with options, and we're gonna have more time to talk about more options for trade management, more different option strategies, more of everything, and it's gonna be exciting to understand other things that we can do. So far, I'm still in my, let's say, old simplistic mode, which is we're just holding it all the way to March 19. We do nothing, we don't touch it. Okay, and if that was to be the case and you want to assess what's your risk, so one smart way to do will be to come to OptionStation Pro and evaluate using your Iron Condor what probably say when it comes to your +1 standard deviation and -1 standard deviation, which are pointing at 285 and 240. So let's find out what is 285 and 240, and notice how 285 is more or less here, somewhere like that, and 240 is more or less here. So in other words, based on probabilities, we are indeed going to stay in the purple area, because not only probabilities suggest so, but on top of that we got multiple UFOs above and below. So again, odds are in our favor for the trade to end well. Yeah, and I see your comment, Mark. I did not take the trade. However, I would have closed the trade at 50% profit. Very good. Perfect. And this is a very valid rule, by the way. Okay. Now, this is not a rule you could apply to all stocks. because not all stocks are equal when it comes to liquidity. Facebook is definitely normally a pretty liquid option chain, and in this sense, it would be absolutely fine for you to have done that. With other stocks, you may not be able to do it, okay? Because then you get killed on slippage, or you don't get filled. I mean, you don't get killed on slippage if you use a limit order, which is what you would use is in mark, but you may not get filled, which is another way to suffering slippage, if you wish. Is kind of like a passive way to suffer slippage, right? Because you cannot exit at the price you want. Okay, so anyway, what about NVIDIA? So what do we have with NVIDIA? Okay, so with NVIDIA, we had it was a very aggressive trade. Okay, it was a very, very aggressive trade that we had. It was a one-day iron condor. You may remember that. And again, I'd love to know if some of you took the trade or not. And basically, we entered that particular day and we said, okay, we're going to use expiration dates being February 19, which was the week before. And basically, we are expecting the stock to remain in the purple area until then. And it did. Okay, and why is it that we didn't want to go beyond that? Well, because then beyond that, we had earnings, and notice what earnings did. Okay, so we didn't want to be exposed to the common craziness attached to earnings report. We don't want to do that because, you know, there is a lot of uncertainty, and uncertainty equals less odds. So we don't want to trade and hope. We want to trade based on something that is reliable, even though nothing is a guarantee in trading, but at least you got odds that are measurable in your favor. So we did the trade with a one-day duration, okay, and for the ones of you that took this trade, the trade worked well. So we ended up inside the purple area. An extra note is that there was a UFO right there, and so when NVIDIA tried to go higher, the UFO brought it back down to end up in the purple area during that one-day expiration that we needed. Okay, so this trade is over, so I'm just gonna delete NVIDIA now. But good job, guys. If you guys were in this trade, beautiful. Mark, it still looks like one could do a new trade on Facebook. Yes and no. Based on the chart, you are absolutely right, because I just did a mathematical projection of price movement, right? And it was 285 and 240, and we got UFOs above and below. So the answer is yes, you could still do the trade. But funnily enough, if I look at my filter of non-directional trades, Facebook is not there. So what does it mean? Well, it means either one of the two things. Either that move to the downside, that was quite aggressive, to be honest, it's telling our scanner that that stock is not ranging any longer, and therefore is not a valid candidate, or is a candidate with less probabilities to do a non-directional trade. Or the other possibility, let's take a look. I'm going to move to the daily time frame to check that. I'm going to turn on implied volatility. The other possibility is that the prices of options went down, and that's what happened. Okay, when we did the trade, the prices of options were about here, which was about 27, and now the prices of options, the implied volatility, just to be properly technical, went from 27 to 15, which does imply a great level of reduction on the prices of those options. So the trade, therefore, very likely will not pass the criteria of the amount of premium that we want to accept the trade. Okay, so but I get your point, Mark. Just by purely looking at the chart, definitely the trade still looks good. Good. So with all of this said, we just took care of the initial two items of our session today, which is understanding the market and understanding the trades that we had running. So from there, we are now going to move into looking for new opportunities. Okay, so far great. We got two trades there, and they are both making money. NVIDIA trade ended up as a full profit. Facebook is on the green, so all good. But again, it's not always like that. So I want to go through the process of finding new trades, quantifying the risks, explaining the whole process. So that way, also beyond the time we spend together in the sessions, when you guys practice on your own, you know exactly what to do, okay, which is very important. Okay, so let's do that, and I'm gonna start with non-directional trades. Okay, I'm gonna sort this utilizing VMware on the top as the first one in the list for me to assess. And as I load that chart, the first thing I notice, okay, which is basically invalidating the trade, is that earnings took place yesterday. on the 20 actually are taking place today at 4 p.m. Let me rephrase that. I am in Asia, so for me it's already 25. It's already 26. Sorry for that. But if you're in the US, for example, so 25 is today, and 4 p.m. New York time is when earnings will take place. Okay, so we talked about avoiding earnings. Okay, and therefore we're not gonna do anything here because it would put us in trouble, at least very, very likely in trouble. Okay, so no trade with VMware. What about K? Okay, let's take a look at this company. So earnings are looking like they would happen on April 29, and that means that this is a long time from now. So let me go ahead and, out of curiosity, I want to check EPS postings. Yeah, so the last earnings just happened, and that was on 2/12. Okay, so that was 2 weeks ago. So that's good. Earnings happened not too long ago, so the next earnings will take a while before they happen. All of this is good. The only thing that may not be exactly in our favor is the fact that the price of the stock is only $58. So we may not collect as much premiums as we would want. But the good news is that we could certainly go far in time using longer term expiration options because earnings are not happening until April 29. So that's good. Then the other thing that looks very good, very powerful, this is not common to see such a figure on stocks, is that the UFO performance stats show 58%. Stocks are fragile, but it seems that there is a huge commitment and institutional interest right now to get orders filled on that particular stock. Okay, so that's great because certainly it's gonna bring more odds in our favor. Okay, now notice how I got multiple red UFOs above, but if I shrink the chart, I only have one green UFO below. Okay, and maybe I will be able to uncover more if I switch to pre and post market. I do uncover more green UFOs, but look at what happened to probability. It doesn't meet our rule of 48% any longer, so we cannot do that. So I'm gonna have to work with regular session. Okay, so why is it that I don't have more green UFOs? Well, very simple, because that stock has probably been dropping for a long time. Look at that, since all the way October last year. And therefore, for me to find price data below the current price, I need to go back to somewhere around March 2020. Okay, March, even maybe May 19. Okay, so let's try first with March 2020 to see if I get more UFOs, and then I'll be happy enough. And if not, we're gonna have to load more data. So March 2020, here we go. So I'm loading the first date, March 2020, and as this is loading, yeah, nothing there. So I'm gonna have to load more all the way to May 2019. That's what we said. That will be the first date. Click OK. And now we're gonna have to wait for the PD to go away, pending data. And the moment this happens, we are gonna be able to see new UFOs show up, and hopefully premiums will be good enough for us to go ahead and do a good trade here. So let's see. Still loading, pending data still. You know what, in the meantime, I want to check a little bit of the liquidity of Kellogg's. You can see that the first sign, and I wanted to point at this before we even get into the chart, is that we only have monthly expiration options. We don't have weeklies, as you can see. And while it's okay, I mean, it used to be like that for years and years and years, okay, so it's okay. The fact is that when that's the case, normally it kind of denotes lack of liquidity on that stock. So let's take a look at those options using March 19, 95, 110, 205, 220. It's doable. It's not amazing, but liquidity is okay. And what if I use the next expiration date, 50 days, 165, 180, 265, 290 is a bit worse, but it's not terrible. Okay, so I guess we could continue with the plan and see how far we go. So I loaded data all the way from May 2019. I got 56%, and now I got more UFOs. Okay, now I got more UFOs. I had to load more data to be able to uncover that. Okay, so let's take a look. So I'm going to click on the current price, and what I'm going to do is I'm going to measure the distance from here to here. Okay, so I can project the same distance to the upside and see where my let's call it equivalent UFOs, okay? And notice that it seems that it would make sense to use a trading range for this iron condor, this non-directional trade, where we will be dealing or leading against the UFOs located at 65.94 and 52.47. Again, price is not exactly in the midpoint. To be exactly in the midpoint, we need to be just a little lower, but I guess it's good enough. It's a pretty wide range. So again, that's how we should approach this trade. Now, normally I work on probabilities first, and then I draw the lines on the chart. Just to save a little bit of time, I did that first because since there is a huge, very, very wide space with no UFOs below, you know, it could have been that the UFOs above are at a distance where it's really impossible to have a range where price is somewhere in the midpoint. And then I would have discarded the trade. So just to save time, okay? So now that I know we may have a trade, so I'm gonna move into March 19 and right click anywhere, okay? And analyze and sell an iron condor, okay? And change +5 and -5 to be +1 standard deviation and -1 standard deviation, okay? And with those values, I'm just gonna go ahead and plot 63 and 56 on the chart and see if those UFOs are within or beyond or what. So 63 and 56. So 63 is more or less here, somewhere like that. And 56 is more or less here. So obviously, if probability suggests that price is going to stay from now until the next monthly expiration between 63 and 56, and we're going to do an iron condor where our extremes are 66 and let's call it 52.5, well, definitely that's a very good trade from a probability point of view. My concern, obviously, and you are probably reading my mind if you have been in the sessions for long enough, institutional ownership 88.6% mark. Very nice, very nice. Where are you getting that figure, by the way? Just curious to know what's your source for that. So if you have been in the sessions for a while, I was saying that probably you are thinking like I am thinking, which is, okay, well, are we really going to get paid enough if we sell calls about 66? And I would say probably not, okay? But let's go ahead and take a look and see what do we have. So first we got 65 and 67.5. So if we use 67.5, the midpoint is 8 cents. And well, now we know that's not enough. Why is not enough? Because our rule is minimum 35 cents. Okay, minimum 35, and we don't have 35, we have 8. So that is not acceptable, and therefore I am forced to move into April 16, which is 50 days. That's a long-term iron condor. And if I was to do 67.5, well, wait a minute, I'm being paid 18 cents, which this is, you know, this is not a technical term. Jose, I don't other people comments. Oh, Ahmed, that's because Mark is in the private room that you find on our website in tradewithufos.com/live. So Mark is there, and therefore he's texting from there. So I'm actually looking at multiple chat boxes, so that way I don't miss you guys. Okay, for the ones of you that you are on YouTube, or the ones of you that you are in other places. Okay, Mark, you're using FinVis. Got it. Perfect. Very good. So yeah, so I was going to use a term which is not a technical, or at least a proper official term of options trading, but you will get my point. And the term I want to use is price distortion. Okay, what do I mean by price distortion? Where I mean by price distortion that it doesn't make sense that, you know, with 50 days to go, 67.5 pays you 18 cents, and with 22 days to go, the 67.5 pays you 8 cents. It's like the one that expires 22 days to go, it's paying you way better. If you think of proportions, from a proportion point of view, it's way, way better. Okay, way, way better. And we know that that is the way options work. Okay, that is not linear, but at the same time, it's too exaggerated if you think about it. If you think about it from the point of view of amount of days, and this has a lot to do with how market makers are making the prices for those options. I mean, we can also see a little bit less implied volatility 2302 instead of 2379. But again, it's just a little bit. It's not that major difference, okay? And therefore, that's why I'm adding that term here of price distortion. So you will see these kind of things happen when stocks are not so liquid. Okay, that normally will not happen at all if you were to do options on the SPY ETF, for example, which is one of the most liquid assets there is. Okay, so anyway, so I'm moving to LB and see what we have there. Mark, trying to help out by signing up for coaching. Very appreciated, Mark, very appreciated, and I know you will enjoy it very much, especially as we start with all the additional options material, which I know you are such an options lover, and I do have let's call it fun plans, okay, of things that we're gonna do that are gonna be powerful. So we're gonna have fun. You'll see. Very nice. Okay, so just waiting for this to load. In any case, one thing I'm noticing here is that it does give me the impression, let me move to a monthly time frame very quick. It gives me the impression that that stock is making all-time high. Well, guess what? I was wrong. It's not. So I was thinking that, it's such a strong move. There are many stocks that are in that territory making all-time high. So I thought that was the case, but it's not the case with LB. Okay. So, okay, great. So then I'm going to go back to the 55-minute time frame, see if we got the probability we need. And then I'll have to load more data to find red UFOs. So let's see if this comes in. I'll have a sip of water in the meantime. Oh, I know what's happening. Guys, earlier, silly mistake from my end. I mean, it's not like a major mistake, but definitely I'm wasting my time. If I switch to 55 minutes, remember the last time I went for May 2019. So I believe that TradeStation was trying to get all that information. So now I'm back to my normal amount of bars. And probably this should be a bit faster. If you ever have slow downloads like I'm having right now, you can always go to the download scheduler. Okay, and yeah, you see, so it was downloading from May 1st, 2019, and you can go ahead and kill it just by hitting delete on your keyboard. So just kill it, okay, and then switch time frame, and then go back to what you want, and then that's it, you have it. Okay, so this is kind of like a shortcut to unlock a little bit of speed and avoid some waiting time. Okay, so do we have red UFOs above? No, we don't. Okay, and we don't because of what I said. The UFOs are giving us 48% or above, so that is encouraging to load more data and see if a trade is to be taken or not. So I'm back to the monthly time frame. It seems that more data in this case will be located about oh wow, that's a lot of data. We need to load data all the way like February 17, something like that. November 16 actually. Okay, so let's do this. Okay, if we do this with the UFOs on, it's gonna really slow down the computer. Okay, so what I'm gonna do the following. First, change to minutes and then change to November 2016. Okay, so I'm gonna start the download the way you see I'm doing it. I turned off AutoUFOs and start the download. So now it's pending data and the download scheduler is taking care of that. And what I'm going to do in the meantime, because this is going to take a long time, so instead of waiting here, I'm just going to move to directional opportunities and see what's available, and then I'll come back later to do the LB trade when the data is downloaded, okay? Because if not, it's going to take too long. So let's go ahead and move to directional opportunities, and what do we have? So we have UNP, HLT, RTX. So we have a bunch of opportunities which are, I would say, solid stocks. What I mean by solid is, from a liquidity point of view. So I'm just changing my time frame to load the limited amount of candles I want now, while the download is happening behind the scenes. And now I'm moving to UNP and see what's happening. So with UNP, first of all, from a climate point of view, we just started an up climate. This is candle 1 out of 6, okay? So certainly it's the right time for us to get into a trade. And for us to get into a trade, we need to find UFOs enveloping 208.80 with a performance metric of at least 50%, okay? At least 50%. So let's find out as PD it's fully loaded, if we do have that. We are looking at UFOs around 208 something. Okay, let me do the same for HLT. I mentioned this before in other sessions, guys. I have the habit, which is a healthy habit, of sometimes deleting the cache folder, so all market data gets reloaded. The downside of doing that is that sometimes, when I'm conducting a session, then I'll have a bit more waiting time, isn't it? Yeah, but that's what it is. So we're just, we are traders, so we can use patience, isn't it? And if we cannot, we should, because it's part of trading, right? And at least in my mind, learning how to trade not only has an impact in your bank account, also has an impact in how you live your life. We gotta become better in some aspects of our mindset to be a better trader. And if you get better in your mindset to be a better trader, typically that means that you also get better in other aspects of your life. So yeah, so that long download I have there, it's really slowing down the whole thing because it's still downloading. So look, I'm just gonna kill it. I'll continue downloading later on. Okay, so here's UNP. Let's go ahead and turn on AutoUFOs. So what do we have? So we have UFOs at, well, first of all, the UFOs are giving us 47%, so that is not acceptable. So the only change we got there is to switch to pre and post market, and in this case it gives us even less, so not acceptable to do the trade with UMP. There is not enough institutional interest as of now. Okay, many times we find more institutional interest pre and post market than during the regular session. Okay, but not always. Okay, every case is different. So we got HLT. Let me see what we have. Well, to be honest, no need to wait. We're gonna pass on HLT because the current climate is confirmed. Okay, it's confirmed, but it's been running for 16 candles, where probability says that 6 is a normal thing to happen. So in other words, this amazing move, okay, on that stock, it's statistically not sustainable. And while it could sustain, because statistically it's not a reasonable bet, we are just gonna pass and we're gonna move into the next one, okay, which is RTX. So with RTX we have a similar scenario with a move that has been running for 16 candles, where statistics suggest is 6 or 7. So we're gonna pass. TSN. Less exaggerated, but same scenario. Okay, less exaggerated, but same scenario, where we are in a confirmed climate for 6 candles. Statistics suggest 5, so it's a bit late to the party. Let's take a look at Schwab. Same story, 14 out of 7. Okay, so 2 extended, so no trade so far, and this, my friends, is part of trading. There are days like this where you have to be sitting on your hands, and that's how you make money, by not trading when it's not time to trade. Okay. So what do we have here with Dow? Well, we have a confirmed climate. This is candle number 4 out of 5. So that one is a valid one. Okay. So if we were to find UFOs with the right probability, and the UFOs were to envelop 60.73, then we'd have something tradable. So let's see what's going to happen with Dow. Is still pending data, as you can see here on yellow color PD. So 42.31. Okay, 42.31. Come on, my friend. I'm just going to try to save a little bit of time if the other stocks were still downloading, like TSN, we don't need that one. And Schwab, we don't need that one. TSN, we don't need that one. Okay, so now hopefully it's giving a bit more speed of download to Dow. And SLB and UBS I'll pass if that's okay, because they are very low price point stocks, and it always makes it more difficult to adjust the options play when the price of the stock is low. Okay. so I'm gonna pass. Okay, come on, my friend. I'm just gonna click on LB as well, just to make sure it's being downloaded, and then back to Dow. Come on, my friend. So we can do the analysis of the UFOs, because the AutoClimate is giving us a go ahead. So we now need to see those UFOs. Okay, well, I'm not sure why it's being so slow. Well, I like the setup very much. The stock is making all-time high. So again, we had beautiful trades last year with this type of setup, because basically you don't need to set a target. Okay, here we go. So we got 50.43% probability. Okay, so probability is 50 or more, so that's acceptable. We are looking at 60.71. So certainly that UFO that starts at 60.53, that in my mind, I will call it as good. Why? Because for us to get to that UFO, price has to drop, and therefore the EMA will not remain as 60.71, right? So 60.53, that would be our entry point into this trade. But I also want to check pre and post market, where we have less probabilities, okay? But at the same time, we do have a UFO which is a bit higher, 60.73. So you know what? It's only 20 cents. So while I'm not taking the trade because of this UFO is not meeting the rules, but because that UFO is lining up with the other UFO we have in the regular session data chart, so I just don't want to miss the trade, and it will be very, 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 very sad that I missed the trade because of 20 cents, and now that stock starts making all-time high all the way, big time, right? So here we go. So we have a good entry, okay? We have a good entry. From a target point of view, I said it, okay? So if I look at the daily time frame of that stock, and I was to turn on to UFOs, I would see nothing. Why? Because it's making all-time high, okay? So I'm just gonna write it and see how far it goes, starting at 60.73. So when we do a trade like that, to be honest, the way to approach it is very simple. I'm gonna load Dow. We are just gonna go ahead and use a call, a simple call. Your TSN says climate is 771. That means that we are loading a different amount of data on the chart, Mark. I'm sorry, I'm reading you late. But that means that we are loading a different amount of data on the chart, okay? It's okay. AutoClimate, it's a critical tool, but at the same time, is not a tool where you need to shoot for so much accuracy. Because basically the role of AutoClimate is to tell you it's time to trade or not. That's it. That's where AutoClimate ends. Where you need precision is with the UFOs and all of that stuff. Okay, that's where the precision kicks in. So again, notice how if both you and I were to be planning on this trade, we will both conclude it's okay to take the trade. Okay, and yes, could it be that in your case you may still say yes to the trade a couple of days more than me? Yes, it could. But again, the goal is met, which is to not to get you entering a trade when it's late to the party. It's just that given my settings and the amount of candles I load on the screen, I am just a bit more on the conservative side than you. That's all. Okay, take a look. My settings are 500. I'm loading 2 years of data for the calculation. Sorry guys, I need to cough. Give me 1 second. Sorry for that. I had to. So yeah, I'm loading 2 years of data, okay, and you know, if you think about it, so that's about 500 candles more or less, because every year is 252 trading days times 2, so it's, you know, it's more or less 500 candles. Anyway, so let's put the trade in place, okay? So we are going to be doing Dow. We are not going to have a target, okay? So again, no target, follow price into an all-time high opportunity. It's not a sure thing, but if it starts making all-time highs, let's follow price. Okay, let's see how far it goes. Okay, so how are we gonna manage this? Well, we're gonna trail exit using UFOs, plus we will exit prior to the expiration date. Sorry, let me say that again. Prior to the earnings report. Okay, so we don't get in trouble where, like, you know, let's say you've made a beautiful trade there and it's working beautifully in your favor. Next thing you know, earnings are published. Next thing you know, the stock goes against you by 20%, and you just give it all back just in one day, just because, you know, greed kicked in and you're like, okay, let's see what happened with the earnings. Okay, we're not gonna do that. We're just gonna get out mechanically, professionally, with discipline. That's it, done. Okay, so that's the plan. So we are waiting for that stock to drop from 61.65 to 60.73. This could happen today, actually. And the moment it touches that line, we will buy a call, expecting it to go up, and ride the move as long as we can. Limit will be the earnings report date. If it goes against us, you could choose to use stops. My plan will not use stops. Why? Because if I use stops, if I use a call, the most I can lose is what I pay for the call. So I know what I'm going to lose maximum anyway, even if I don't use stops. So I prefer not to use stops. So if that stock was to go down, and instead of reacting to that UFO, it needed to go down all the way to that UFO before it starts making all-time high, you know what? I'm still in the game, knowing that my risk was limited. It's not like I'm hoping, please UFO, turn the price. Oh, you didn't work. Oh, please UFO, turn the price. Oh, you didn't work. Oh, please, next UFO, turn the price. It's not about hoping. It's about understanding that the markets are fragile. And if the S&P wants to collapse for 2, 3, 4 days before it turns, okay, you want to allow the stock to do its thing before the move happens. And if you use hard stops like you would do with stock shares, then you may be taken out of the trade, and then when the move happens, you're out. Okay, so we're going to use the beauty of options to not to be out, and obviously this will imply a smaller position size. That's the downside, but you know, it's still a powerful thing to do. Yeah, so let's define the trade. Mark is asking about the strike price. Let's define the trade, of course. So in order to define the trade, we're going to have to look at earnings, because I said that's going to be our limit, right? So April 29 is earnings date for Dow. So I'm going to be looking at options that expire after or around, what did I just say is April 29. So April 29, I mean, the most reasonable option to use would be April 16. Okay, that would be the most reasonable option. So I'm going to use that one. Okay, and what I'm going to do is I'm going to right click anywhere on the call side and analyze and buy. So now I come to my analysis tab. Here we go, I just said it. I'm going to input my entry price, which is 60.73. Okay, and even though I got a, you know, I'm just going to make it as always plus and minus 1 standard deviation above and below. To be honest, I don't care about that. This is just a projection of where price may go. What I'm going to care about is the deltas at entry. So if I was to buy the 60 strike, the deltas I get at entry is 56.22, which is too much. Our rule is to get deltas of around 30. So what if I move to 62.5? Well, notice that this is 44. What if I move to 65? Notice that this is 32, and this is as good as it's gonna get. So we're gonna buy the 65 call that expires in 16th of April. Before we get too excited, I want to go and take a look at that call. We can see how liquidity is not the best. Okay, so we got like 40 cents of spread there. I mean, less than 40, but yeah, 30 cents of spread. That's not ideal at all. Not ideal at all. But funnily enough, it is the one with the greatest volume yesterday. Okay, today we got a bit more volume on that one, and a bit more, much more volume on the 70. But the 70 would have too little delta. Okay, so the spreads will be much better, but the delta will be too poor. Okay, too poor. So I mean, I can show it to you. If I do 70, the delta becomes 14, which is half of 30. Okay, so we're not gonna do that. We're gonna stick with the 65. But my recommendation, guys, is that instead of placing an order, okay, what you do is that you place an alert. That's my recommendation. Because if you place an order, you may get too much slippage on the entry, given the liquidity parameters I can see here. So it would be better to wait for price to come nearer to the entry, and then place a limit order and try to shave the spread, go for half of the spread, and you may get filled. Okay, you may get filled. I mean, there is a very decent open interest here, 1,100 contracts. That strike, you know, should be okay to do a little bit of negotiation with the spread and be filled. But just don't do it with a market order, or don't do it with just an order. Just go ahead and place an alert, unless you use an advanced way on how to place the order. Okay, and you know what? I think that I'm just gonna do that. I'm just gonna show you the advanced way on how to place the order. So that way, for the ones of you who are busy and cannot be in front of the screen, so you have a way on how to do it. And this would basically take us all the way to the top of the hour, and we'll conclude the session then, which also means that we did not disconnect the public streams today, which is fine, guys. We're here to help. Again, it took a long time for me to find a trade, and that's the reason why. Normally, remember, for the ones of you that join us a bit later, that the way we are running the sessions now is that the moment we find the first trade, we will then disconnect the stream from the public places such as YouTube, Facebook, and we will stay on the private room only. Okay. Again, it's about quantity, it's not about quality. We're gonna do the same things in both places, but for the people that stay in the private room, they will get more practice, more trades, more questions, more answers, more quantity, if you wish. Okay. Not today though, because today the market made it a bit difficult for us to find that first trade. Okay. So again, looking to find a balance there on how we operate and we do things to help you as much as we can, and you know, find that fair approach to supporting the ones of you who are you know, looking to be that, you know, super passionate, super trader, and also supporting the ones of you who are looking at this more as a part-time type of activity. Okay, so that way everybody's happy. Anyway, so how do we place that order then to make it advanced? Well, here we go. The first thing that you're gonna need is the symbol. Okay, and you could get the symbol from the symbol column here. Okay, you could expand it and copy it and type it manually, but this is the recipe for mistakes. So I always advise to right click and copy symbol, because that way later on I'm just gonna paste it in the right place and I will not have to do typing, and in that sense I will avoid human mistakes that we all make. Okay, so I'm just gonna copy symbol, move into TradeStation, and to place this order, I'm not gonna do it from OptionStation Pro, I'm gonna do it from the trade bar. Okay, and you will see why in a minute. And I'm gonna do it, I mean, you will want to click on options, okay, isn't it? And you would now paste the symbol, so Control V, and here's the symbol, as you can see. And I'm just gonna assume that you're gonna go with one contract. By the way, if you go with one contract, the risk of the trade, the anticipated risk is $152, 153, right? This is the simulated value of the option whenever the stock drops from 61.90 all the way to 60.73. Okay, the price of the option, which is currently 194, will reduce to become 152. Okay, that's what the simulation is telling us. So if you take one trade with one contract, the most you will lose is, let's say, 155. That's the most you will lose, depending on the price at which you get filled at the entry, right? That's going to be your risk, the premium paid. Again, let's say you tell me, Jose, I'm okay with $300 of risk. Go for two contracts then. You know what I mean? But in this case, I'm going to assume that all of you are looking for one contract. So I'm going to use contract one as a quantity. Okay, and then you got the limit price, where if you want to automate with an activation rule, the normal thing to do will be to use market, which I'm not going to do it like that. Okay, but bear with me. You will go ahead and use market. Then when you click activation rule, okay, you will make this trade to be either day or good till cancel. It's better to make it a day order because you want to review your auto climate and your values every day, right? So I will leave it as the order. And then when you click activation rule, this is where you would set the rule for the stock, okay? And you would say, okay, I want Dow to be less than or equal to 60.73 for me to activate this order, okay? So in other words, if I click OK, and I go back to my trade bar, so now because I got an activation rule, oh, sorry for that, maybe I should do this, okay? So because I got an activation rule that only activates this order if the stock drops to 60.73, and because I got the market order, so what this would do, which you don't want to do it like that one more time, but what this would do is that the moment the stock drops to that price, immediately at whatever price, you would be buying that call and you would be filled for sure. Okay, so again, that's very, let's call it convenient from an execution point of view, but it's certainly not smart enough in the sense that you will leave so much money on the table if you were to do it like that. So what are we going to do instead? Well, instead, I'm going to suggest to switch to limit. So now we can negotiate our price. But you are probably thinking, but wait a minute, how do I know the limit price to place here, right? You don't know because the current price is, 184 to 202. So again, because of the simulation, we concluded that the buying price would be 157 now. Okay, so could I go ahead and type 157? Well, yes, you could do that. You could do that, and then you will buy at 157 or better. That's one way to do it. But as you can see, the simulations fluctuate. We saw 152 earlier, now it's 157. Now it's 158. So all of these fluctuates. So really what I care the most about is not the price, really. What I care about the most is to get as close to the midpoint of the spread as possible. So if you look at the distance between 184 to 204, it's 20 cents, right? So if you want to shave half of it, it's 10 cents. So one better way to approach this would be to select an auto price, okay, which is either join and then add another condition to remove 10 cents, which would be done by using the option called shave. So you would take shave and you would be like, okay, shave. Why is not allowing me to shave? Oh, here. Okay, okay, here we go. So, no, sorry, not 5. We say we want 10. Here we go. 10 cents. Here we go. I got it. So shave 0.10. Okay, maybe it's better if I zoom in so you see it better. So shave 0.10. So if I was to do that, it would take whatever price is available at the time of the entry and place an order 10 cents cheaper. Okay, so that's one way to do it. Another way to do it in this case where you want to go exactly to the midpoint, in case the spread has widened, what if instead of 20 is 25? What if instead of 20 is only 15? So another way to do it is to just go for split. And split is just going to give you the midpoint. Okay, so again, what's the downside of doing this? You may not get filled. What's the beauty of doing this? Well, you avoid slippage and so on. One way I would like to add, and we will conclude the session this way, one extra tip I would like to add that helps a lot of getting the price you want would be to go back to the activation rule, and apart from having a price rule, 60.73, it's to also have a time rule. My time zone here on this computer I'm using to teach is New York time. So the market opens at 9:30 a.m. right? Now what happens at 9:30 a.m.? There is no liquidity. Options liquidity picks up later on. Okay, so what would I do? I would add just a few minutes. Okay, so just make that order to activate only after, let's say 3 minutes after the open. Okay, or if you know it's a stock that is not liquid, maybe you make it 10 minutes, 9:40. Okay, and now when the order is sent to the market and you're trying to split the spread, at least you know there is some liquidity. There is someone on the other side that may accept your deal. Okay, where if you were not to do that, it will not work. In this case, it's irrelevant because we are during market hours, and if you place the order now, it's obviously more than 9:40. So it's irrelevant. But I'm just saying, if you were to place an order before the market opens, or you place an order for tomorrow's trading day or something like that, so this type of rule may help you very much to find some additional liquidity. So with all of this said, I'm just gonna click OK, and now it will be time to click buy to open. And here it says buy to open, the order advanced, if it's 9:40 or more, and if the price of Dow is 60.73 or below, and we're gonna go with a split limit order to buy the 65 call that expire in April 2021. So I'm just gonna click yes and send the order to the market. So the order has been sent. I can look at the manage tab. We can see the order is here. Again, as you know, I am using a simulated account to run the sessions with you guys, which means that this order will not get filled. But in any case, I will be monitoring that, and we will be looking at this trade in the future sessions in case we do meet the entry. Okay, so here is Dow to be reviewed, and we will work on that in the following sessions. With all of this said, my friends, we just reached the end of the session. You guys have been quite quiet today. I hope all is good. I hope I didn't go too fast, and that's why you kind of got like trying to follow and not having time to type your questions. So hopefully all is good. If it's not the case, let me know, guys. Shoot an email to me, jose@traddictiv.com. Let me know how things are going. And remember, we are here for you guys. We are all passionate about the markets and all of this. So just let me know, let us know what is it that we're doing right when it comes to supporting you. What is it that you need that we are not doing or we're doing differently? And that way you guys can do better in your trading as well, okay? And the last thing I would like to mention before we go, something very exciting, to be honest, very, very exciting. If I go back to the website and I look at our courses, for the ones of you that are in learning stages, which I believe is probably the majority of you, we just released our trading psychology course yesterday. Okay, so if you are keen to master your own trading psychology, which is obviously something absolutely key and fundamental in mastering trading, go take a look. It's a 3-hour plus course, 33 lectures. You have all the details here, what's in here. Reynaldo, it's the instructor, and you have 2 ways to do the course: self-paced, or you can also do live exclusive, even though we just released the course, so we don't have dates for that yet. The content is the same, so I would suggest you guys to go for the self-paced if you need support when it comes to your trading psychology and you want to better your own trading mindset, okay? With all of this said, my friends, super pleasure one more time. See you next time. That's going to be next week. I believe there is a session with Becky this weekend with sharpening, if I'm not mistaken. Don't miss it. And talking about trading psychology, Reynaldo will be running psychology tomorrow, so don't miss the session with him. Everybody, you guys take care. Bye-bye. See you soon. Leland, a pleasure to see you, my friend. Take care, everybody.